Hello. Yes. Yeah. We can sit other sides if you want. Not if we mute each other, because we're not going to be speaking at the same time. I don't mind. So I've booked out the other boardroom at 11. Yeah. Well, no, I've booked the other boardroom for 11 till 12. Yeah, no worries. Good morning, everyone, and thank you to the early attendees that are already on stream currently. We are just waiting for a few more people, so please do bear with us. It shouldn't be more than a few minutes. We're aiming to get started for around 11:03 local time. So please bear with us, and we will be started shortly. Good morning, everyone, and welcome to today's event. This is Mayor Battery Group, MBG Corporate Services webinar on the economic substance regulation. I'll be talking you through the first portion today. My name is James Martin. I look after the advisory team as part of the European Enterprise Division of MBG Corporate Services. And joining me today is Sakina Dickenwala, our director for MBG's legal services. What I will do to start with is I'll run through a brief introduction for those of you who are unaware of MBG Group and what we do as a business. And then after that, I will then hand over to Sakina to start the main body of content around the new changes to the economic substance regulation. So for anyone who isn't aware, MBG Corporate Services are a full service advisory and consultancy business. As you can see from the infographic on the screen, we've been around for 18 years. We were incorporated in 2002. We currently have 16 offices in 6 locations. More close to home in the Middle East region, we have 3 offices in Abu Dhabi, Sharjah, and Dubai that are home to 150 staff across various technical sectors. And I'll talk about some of our product portfolio in a moment. As an organization, we are a global entity with a global reach, and we're very fortunate to say that we have over 3,000 clients, and we work with well over 100 of Fortune 500 companies worldwide. Next slide, please. One of the unique benefits of working with us as a business, we are a boutique offering, but we like to believe as a company we have no restrictions. So the way that we operate, as I've mentioned, work as part of the European enterprise team. We have Japanese, Chinese, Indian enterprise teams that help make sure that as an organization, we can cover any gaps, whether that be from a technical perspective, from a commercial perspective, or even from a linguistic perspective. A number of our clients are large multinationals with offices worldwide. We can bridge that gap and work with anyone, anywhere on the face of the earth. Next slide, please. So, partnering with businesses, I mentioned that we do work with MNCs. However, we're not limited to working with large corporates. As an organization, we have the ability to reach out and work with anyone at any stage of their business life cycle, whether that be startup companies looking to launch a product or launch a new office. We have a very solid new business and PRO service. Once you get to that stage and once you're set up, we can help you grow. We can help you add operational frameworks, regulatory frameworks. We can help you shake out and review policies as the business continues to grow and mature. And then once you get to that stage, if you do become a larger entity, we can then work with you operationally to make sure that business propositions are streamlined, products are best positioned in the market, to make sure that you understand exactly who your target audiences are and make sure that you're getting the most from everything that your business has to offer. Now, as an organization, we have a very expansive product portfolio. I'm not going to go through every single slide on here, but as you can see, we cover a number of audit, risk, taxation, M&A, legal advisory, technology advisory. There is, and that's not exhaustive. So we like to think that as a business, we are able to cater to the needs of our clients. We are currently working with a number of businesses that have very complex and very unique propositions. So we work very closely and partner with our businesses to make sure that we understand the unique requirements that you have and make sure that we can tailor something specifically to your needs. As an organization, we are what we like to call industry agnostic. And whilst we do have a number of technical experts within the business that have worked within various sectors, whether that be banking and finance, construction, insurance, hospitality, shipping, oil and energy, we are not limited by these sectors. And what we're able to do is bring a lot of best practice across each of these disciplines, again, to make sure that you're getting the most from any partnership that we have as an organization. So that's MBG in a nutshell. What I'll do now, let me introduce Sakina Dickenwala. As mentioned previously, she is our Director for Legal Services. Sakina has well over 8 years of professional experience advising businesses across corporate and commercial law, employment law, real estate law, etc. 6 of which have been with businesses across the Middle East and the GCC. As mentioned, we are industry agnostic, so Sakina has been able to advise a number of MNCs, SMEs, mid-range entities across a range of legal requirements. So without further ado, let me hand over to Sakina, and I'll allow her to talk through the ESR regulation. Thank you very much.
Thank you very much, James, and a very good morning to all of you. Thank you so much for attending this webinar. So let's start our session. Next slide, please. So basically in the slide, we have captured about the requirement to introduce this new regulation. I believe most of you must be knowing that in 2019, there was the implementation of economic substance regulation. So, and after which the companies mostly did the compliances, and now thereafter in this year, in August, there was a new announcement about this new regulation number 57 of 2020. So we have captured why there is a requirement to issue the new regulation. So basically, the old version of this regulation was not completely covering the requirements of the OECD as well as the European Union Code of Conduct. So this is the requirement to introduce a new regulation to curb the harmful tax practices in the region. So these are the key highlights that what are the new changes that has been brought by the regulation. So mainly there is a change in terms of the administrative part wherein FTA has been introduced as an assessing authority. We have covered about this in detail in the coming slides. Also some definitions which were not bit clear in the previous regulation has now been clarified, and the terminology has been very prudently used in this regulation. With respect to the exempt licensees also, they have changed the criteria. Earlier there was a different criteria of exempt licensees. Timeline has been very clarified and clearly noted down in this new regulation with respect to filing of notification as well as the reporting. Economic substance test parameters have also been revised to a certain extent. Penalties have been revised. There has been change in the scope of some of the relevant activities. Where there is no change, then it is following the same as of the previous version. Also, there is a requirement for re-notification because, as I have mentioned, that most of the companies have duly done the compliances. They have filed the notification previously within the given deadline of 30th June 2020, but all those companies now need to reassess the businesses as per the changes that has been brought by this new regulation, and they need to do a re-notification. And there has been a more clarity on the submission process now, because previously also they had clarified how to submit the notification, but there were many authorities and relevant authorities were involved in this. But now they have centralized the process. Mostly the applications are going now to the Ministry of Finance. Next slide, please. So when we talk about the coverage of the new scope in terms of the relevant activity, when you see the arrow going upward with a red color, that means that there is an enhancement in the scope. So basically there are two activities: intellectual property business and distribution and service center business, where there is an enhancement in the scope. And when we see about the investment fund management business, there's a reduction. There is a reduction in the scope, which has been highlighted as a green arrow going downward. Next slide, please. So this page talks about the exemption of the entities. So previously there was a regulation wherein it was being mentioned that those licensees where 51% or more is owned by any federal or local emirate government or any UAE government body or authority, then they can claim the exemption. But now this criteria has been changed. So the new criteria is for the investment fund business, which is claiming the exemption. Also, the tax resident outside the UAE can claim the exemption. Then the entity which is wholly owned by UAE residents, so this particular criteria was silent last time, it was not there, and branches of the foreign company. So now also for claiming the exemption, they need to show the evidence proving that why they're claiming the exemption, mainly in the cases of the branches, because in case of the branches needs to prove that the income earned by them has been consolidated by the parent entity, and the parent entity is paying taxes on such income. So when they get these kind of proof, like by way of tax registration of the parent company or the income tax returns filed by the parent company, if these evidences are available, then they need to file the exemption with the authority, and it is subject to the approval of the authority. Also, there was not a clear clarification with respect to the exempted licensees, whether they need to file the report or not. But recently, I think 1 or 2 weeks back, the Ministry of Finance has also issued the one clarification with respect to the timeline on filing of the notifications and report. Therein, they have clarified that exempted licensees are required to file the reports. Sure, maybe in that they need to claim the exemption again, which is on the discretion of the authority to grant it. And also, if there is a failure to meet the economic substance test parameters and report, then there are penalties which will be applicable on the same. Next slide, please. This slide shows about the status of the branches, which was not previously very clear. So there could be 3 cases of the branches. One could be the UAE branch of a UAE entity. So UAE branch of a UAE entity do not need to separately file any notification or report. The parent entity could consolidate the income and expenses of the UAE branches, and they can file in their report and notifications. Also for the foreign branches, now foreign branches will be treated as a separate entity, separate than the parent entity, and they need to separately file the notification and the report, because definitely the foreign entity is not based in UAE, so they are definitely not filing the returns and reports, so they need to do it on an independent basis. And also the UAE branches of a foreign company is required to comply with the regulations unless the relevant income of such branches is subject to tax outside the UAE. So under this criteria, they can claim the exemption. For example, if the foreign entity is paying the taxes of the UAE branches, then that branch particularly can claim the exemption, as we discussed in the previous slide. Next slide, please. In this slide, we have captured about the distribution and service center business, which is a highly impacted activity under the new regulation. So when we talk about the previous regulation, there was a kind of a very narrow definition being given for distribution service center business. So for distribution, it talks about that how transaction will be captured under the definition. So when an entity is purchasing any goods from a foreign connected party, also it is importing and storing and then re-exporting it, this particular transaction will come under the distribution. And when we talk about the services, then in case of services also, when an entity based in UAE is providing any services to its foreign connected parties business outside the UAE, in that case it will come under the purview of the ESR. Now in the new regulation, it's made very simplified, and also with the simplification it has widened the scope, because just the companies needs to satisfy one definition of purchasing from a foreign connected party. It could be selling anywhere in the world, it could be selling within the UAE also, so all these transactions will come under the ESR. Also for the services also, If any party, if any company is providing services to its foreign connected parties business within the UAE itself, then it will come under the purview of the ESR. So when we talk about the enhancement, there are transactions such as build to ship transactions which were being exempted earlier, but now they are coming under the purview of the regulation. So with the enhancement, there is enhancement in the scope of both distribution and service center business. Next slide, please. High risk IP business. So in case of high risk IP business also, there is an enhancement in the scope by removing one condition. So basically there was a condition that first of all the companies need to identify whether they are into intellectual property business. So once this is identified, then they need to check that whether it is high risk or not. So how we will determine the high risk is that there were two conditions being given in the previous regulation, that the licensee has not created the IT asset by itself. It was being acquired either by its connected party. Now here they are not using foreign connected, it is a connected person. So from a connected person, or in consideration for funding research and development by another person situated in a foreign jurisdiction, or the business licenses or has sold the IP asset to a connected person and earned separately the identifiable income. So when these criteria were satisfied earlier, and in addition to that, there was one more condition that the licensee is not carrying out any research or development, branding or marketing and distribution activities with this IP business. So when these two conditions were satisfied, then it was termed as a high risk IP business. But now the condition number 2 has been removed. That means that if any licensee has acquired the IP assets and earning the identifiable income, then it will be termed as conducting the high risk IP business, also with the condition that it is using it for the marketing and branding purpose. Earlier, if they were using for marketing and branding purpose, it was not covered under the definition of the high risk IP. So there is again an enhancement in the scope by removing this. Next slide, please. So let's talk about the holding company business. So in the holding company business also, what has happened is there is an enhancement in the scope by way of change in the definition of the holding company. So earlier the definition of the holding company was being arriving or was being taken from the local regulation. So as we all know that for limited liability companies, there is a local federal law number 2 of 2015 which is applicable, which also gives the definition of the holding company, by which any company which is holding 51% or more shares in any other entity could be treated as a holding company. But now, because this definition has been removed, so holding company business scope has been enhanced, that even if an entity is holding 2%, 5%, 10%, any percent of shares in any other company, then it would be treated as a holding company. Earlier, there was a minimum holding requirement was 51% by virtue of the local regulations, local commercial law, as well as the free zone regulations also. Mostly free zone law, regulations also provides the same definition of the holding company. So this is how it has changed. Next slide, please. So these are the other criteria with respect to the different items like outsourcing business. So outsourcing business also, earlier it was covering all the outsourcing businesses. Then they under this regulation, it's been clarified that when there's a back office function such as the IT, payroll or legal services, in these cases the licensee is not required to have a supervision, because definitely it is a back office function, and this is why the licensee is outsourcing it. So they don't need to supervise it. Also, there has been a clarification in case of the connected person, which is an entity that is forming part of the same group, and the group is defined as a 2 or more entities related through the ownership or control, such that they are required to prepare the consolidated financials. So this definition has been clarified about the connected person. Also, the law provides a definition of the M&E group, unincorporated partnership, consolidated financial statement, because all these terminologies have been used in the regulation. Also about, it talks about the relevant income, that it will be termed as a gross income earning from a relevant activity that is recorded in the books and the records of the licensee or exempted licensee without any deduction of any cost or expenses. So gross income does not mean any taxable accounting income or profit. There is a broad substance requirement with respect to board members. So board members need not to be the resident of the UAE, but they should be physically present in the UAE while taking the decisions. And there are other documentation requirements, such as the financial statements need to be prepared by the entities, because that will be one of the documents that could be potentially be required by the authorities as a part of the application. So still we have received the formats of the notification as well as the report. However, which document exactly needs to be submitted is not very clear in the notification form and the report form. But this financial statement terminology has been used in contest with the FTA assessment part. So when FTA being the assessing authority, it could ask for the financial statements to be submitted by the licensees. Also, the companies are required to maintain the timesheet of the outsourced employees, and letter or certificate issued by the competent foreign tax authorities, corporate tax demand, or any evidence of payment for exempt licensees. So these are the documents required by the exempted licensees. So this is about the complete documentation part that has been clarified in the new regulation. Next slide, please. So now let's talk about the filing requirement, which is a very important part and the important requirement which is recently being clarified by the Ministry of Finance. So with respect to the notification, what the law states is that all the companies who are conducting the relevant activity need to file the notification within 6 months of the end of the financial year. So when the financial year is been ending in the December, then by 30th June, they need to file the notification. When it's March, then September. So likewise, whatever is the financial year end, the company needs to assess the 6 months and they need to file the notification. So now currently we are talking about a period of 2019, which is the 1st of December 2019, which was the first assessable period for most of the entities. So in that case, most of the companies have already filed the notification by 30th June, but because there is a change in the regulation first time, they need to re-notify to the authorities, for which now the new deadline is 31st December 2020. So Ministry has announced that by first week of the December, the portal or online portal where the filings has to happen will become the active, and all licensees needs to file the notification. Similarly, for reporting, there was in earlier also there was a timeline being given of the 12 months from the end of the financial year, that those who are owed to file the reports, they need to file the reports with the authority. So first reporting will be done for the financial year ending on 31st December 2019. So this is the first period for which the reports will be submitted, following with the other financial years. For example, like if there was a financial year ending March 2020, then their report will be submitted in March 2021. So, but the first financial year will be 31st December 2019, for which we will be submitting in this December. So there are additional informations which are being given in the notification form, as I have already iterated and on this part, that the forms are available. So authorities are asking about the VAT details in the notification form, about the relevant regulatory authority. Also, it is asking about, is there any change in the purview of the business if the companies had already filed the notification. So now what is the change they are filing with respect to the notification. So all these criteria needs to be considered while filing the notification. And for the report also, like there are some questions such as whether the company is forming part of the multinational group, whether audited financial statement submissions, audited financial statements are available with the companies or not. So now here there is a bit confusion in the financial statements, because the law talks about the financial statements. However, the report talks about the audited financial statement. So still we are expecting the authorities to issue more clarification on this with respect to the submission, that exactly the companies are need to submit audited financials or financial statements. So we are expecting it to be released soon by them. Next slide, please. So this is about the assessment and reassessment. So as we have mentioned that the scope of the activities have been changed. So there could be the case that earlier some companies were conducting the relevant activity and now they can claim the exemption. Or there could be the case that earlier some companies were not conducting the activity, but because of the change in enhancement in the scope of main business activities, they could tend to conduct the relevant activities. So it is highly recommended to reassess the businesses and to notify the authorities with respect to the change of business and changed scope of the businesses. Next slide, please. So these are some of the parameters with respect to the economic substance test. So basically, to satisfy the test, the main criteria are to see the core income generating activities. So licensees are required to justify what are the core income generating activities are being conducted within the company as per the relevant criteria given for each activities. Now for each activities, the ministry has clearly issued that what would be the core income generating activities. So they need to substantiate the test. Also about the direction and management, then how many meetings have been held during the year, then whether the quorum was present in the meeting, whether the companies are maintaining the minutes of the meeting or not, and the directors are possessing the necessary knowledge and expertise to take such decisions or not. So all these are the requirements and the companies are required to comply with this. Now the main part in this is that the companies are mainly by themselves preparing the resolutions and getting it signed from the directors. They also need to see what is the requirement of the frequency given in the local regulations, like in the free zone companies, what are the minimum number of meetings which needs to be held. For the mainland entities, what are the minimum number of meetings which needs to be held, and what exactly the company, whether the companies are holding such meetings, not holding, and how they're complying with the testing parameters. Also, when we talk about the employees, assets and expenses, also they need to demonstrate how many qualified and full-time employees the companies have on their payroll. Also, whether the companies possess the adequate physical assets or not, and whether there is an adequate expenditures are being incurred within the country or not. So all these will satisfy the testing parameters given in the economic substance test. Next slide, please. So this is a responsibility matrix with respect to all the authorities. So the competent authority remains the same, which is the Minister of Finance, which has the powers to issue the forms and the manner of the notification that needs to be submitted by all the licensees. Also, this time when the notifications and report will be filed, it will go to the Ministry of Finance. Then there is an appointment of a new national assessing authority, which is the Federal Tax Authority, playing the role of this authority, which is responsible to assess and determine the economic substance test and enforce the compliances. Also, National Assessing Authority has the powers to impose the penalties, to hear or decide the appeals, and it can also issue the forms and manners in which the reporting will be done in coordination with the main competent authority. And the regulatory authorities which have been declared previously remains the same. The free zone authorities and other mainland authorities, mainly Minister of Economy, which was being appointed earlier as well, and their primary role is to collect, review and verify the information. So mainly then they will be passing it to the National Assessing Authority as well as the competent authority for thorough review and assessment of all the applications being received. Next slide, please. So this page talks about the offences and penalties which has been given under the new regulation. So basically, earlier there was a range given between 10 to 50,000 for failure to notify. Now there is amount of 20,000 being imposed for failure in notifying the status to the authorities. Then failure to provide accurate information or incomplete information, it was 10,000 to 50,000. Now there is a 50,000 minimum penalty being levied. So there is an enhancement in the penalty as well. Also, failure to demonstrate the economic substance and test was being captured as a failure. So in case of first failure, there was a penalty range of 10,000 to 50,000, which is now again minimum 50,000 plus the exchange of the information with a foreign competent authority. So this will happen in case it is a branch office or wholly owned subsidiary. So the authorities could exchange the information with the foreign competent authority of these entities. So this was the first failure, and in case of the second failure, then there was a range given earlier between 100,000 to 300,000. Now there's a minimum penalty of 400,000 that could be levied, again with the same implication of exchange of the information, plus there could also be the suspension of the license of the local entity of UAE. Next slide, please. So this is a way forward that now what exactly needs to be done. So first of all, as we have covered that there is a requirement of the assessment and reassessment with respect to the applicability. Although the status will remain the same, but the companies are required to re-notify to the authorities. So this time the re-notification will directly go to the Ministry of Finance by their online portal, which will be activated soon by them. And there should be the documentation to prove that the companies have met this economic substance test parameters, or maybe if they are applying for the exemption, and then finally the reports needs to be submitted. Next slide, please. So this is a kind of a related topic with the ESR, but on a additional note, there is a new regulation which was being enacted by the authority UBO, where every company needs to submit to the authorities about the ultimate beneficial owners in the company. So basically the beneficial owner is an individual who is ultimately owning or controlling the company through chain of ownerships. So we need to see the chain of ownerships or controls or any other indirect mean, or on whose behalf the transactions are being conducted, or who exercises the ultimate control over the company through 25% or more shares or voting rights. So in this manner, we need to put this definition to the company structure, and we need to identify the correct UBO. Also, there is a requirement in the economic substance regulation form to submit the UBO details of the company. So this UBO could be directly an individual, or it could be the chain of entities by which we need to assess, and we need to reach an individual who is ultimately controlling or who is ultimately regarded as a beneficial owner or real beneficiaries of the company. Then also there is a parameter given that if the company is not able to identify the UBO, then the person who is holding a position in the senior management could be identified as the UBO. But again, when we are identifying the UBO, when we are declaring the UBO, the company needs to have a substantiated documents to prove that how that person has been declared as a UBO, not just by giving the name, but they should be having a solid documentation by way of a power of attorney, or maybe resolution, or maybe that person's name is appearing as a shareholder, or by somehow by some way that that person is acting as a UBO in the company. Next slide, please. And also there is a exemption in the UBO with respect to the companies which are wholly owned by the federal or local government. So these companies are exempted to comply with the ultimate beneficial ownership requirements. So the requirements that the company needs to provide is the name, nationality, place of birth, and the legal documents such as a passport, Emirates ID, visa copy if they have on the way for the UBO. the person who is regarded as a UBO. And existing, there was a requirement to comply with this requirement with 60 days, but still the authorities are accepting the application. But officially in the law, this timeline was being mentioned with respect to complying with the UBO regulation. And again, in this case also, the authorities have the right to exchange the information with the foreign competent authorities with respect to UBO. Next slide, please. So on this note, I would like to thank all of you again for participating in this webinar, and I'm looking forward to answer your questions. And I would like to hand it over to James. James?
Yeah, thank you very much, Sakina. That was brilliant. Thank you. So look, I'm just going through. We've had a lot of questions from our audience today, which is always encouraging to see. I appreciate we've gone through a lot of information today, and we've gone through some quite technical processes with regards to the ESR notification, assessment, and what have you. So some of the questions that we've received, either through chat or through social media channels, some have been quite specific to individual businesses and individual needs. So what we'll endeavour to do is we'll get back to every single person that posts questions here today. It may well be worthwhile for us to maybe set up some follow-up calls with individuals just to answer some of their questions in a bit more depth rather than covering off today. But what we do have is I've looked at some of the questions that we've got here. So Sakina, if you're ready, let me just go through the first question that we've got here for you. So it says, our company financial year end is on the 31st of September. Should we file for the whole year, e.g. the 1st of January 2019 till the 31st of September 2020? Our company was incorporated in 2016. So what would you advise there?
Yeah, James, the answer to this question is that, first of all, we need to see what regulation talks about the applicability in terms of the financial year. So basically it says about the commencement of the financial year, that all those financial years commencing after 1st January 2019 needs to comply with the regulation. So when we apply this definition to this case, then the first reportable period in case of this entity would be from 1st October 2019 to 30th September 2020. So this would be the first reportable period, and accordingly, as per the notification criteria and the reporting criteria, if the company is conducting the relevant activity, they need to notify. So in nutshell, the coming deadline of 31st December 2020 is not applicable on this company, either with respect to the notification or with respect to the reporting part. So they still have the time until next year to do all these compliances.
Perfect. Sounds good. Okay, cool. Thanks, Sakina. Next question I've got here, it says, could you please explain who would be the ultimate beneficiary company? We're part of an MNC company. We have a parent company located in Germany, but our headquarters is based in Singapore.
Yeah, right. So very good question. The thing is that, as we have discussed in the UBO part, that we need to see the chain of the ownerships. It will not be the immediate parent who could be, termed as a beneficial owner, or the representative of the immediate corporate shareholder could be termed as a beneficial owner. We need to look into the chain of the corporate entities which are owning this company. So if this chain is ending at the Singapore, then Singapore will be termed as a UBO, and they need to identify the person who is ultimately owning the stake as per the definition of the UA of the UBO, and accordingly they need to declare the UBO.
Yeah, brilliant. Thank you. UBO obviously is quite an important term this year. There have also been lots of changes within the unique beneficiary scheme as a whole. So if anyone has any further questions around UBO as a separate entity, please feel free to reach out to us on chat or through social media, and we can probably give you a lot more insight into the UBO and how it may affect the business. Next question I have here is, do we have to submit the company's notification and ESR report to our free zone authority? Is there a dual submission? and do we have to submit with the FTA? So a couple of different questions there to answer.
Yeah, so as we have noted, there are various authorities being appointed and given with a different roles. So free zone authority, definitely it has a very crucial role being acting as a relevant authority. So last time the submissions were given to the free zone authorities. Now there is appointment of FTA. So basically FTA internally will assess the applications, and if any clarifications are required, it will contact the licensees. But when we talk about the actual submission this time, then the submission will happen to the Ministry of Finance through their online portal, which we are, assuming to be activate by first week of December. So the answer is that applications will go to the Ministry of Finance this time. Although all authorities have their different roles to play in complete this transaction.
Perfect. Yeah, thank you very much. So we are coming up on time, but I think we might be able to squeeze in 2 more questions. So next one is do exempted licensees need to prepare the ESR report as well?
Yes, this is a very good question. Actually, they do need to, because when we see the recent update from the ministry, it talks about the reporting for exempted licensee and for the licensee which is conducting the relevant activities. So yes, the answer is yes, because by virtue of that exemption, they might need to, claim the exemption by filing the documents and all.
Yeah, agreed. I think that's a very important question. Actually, it's something that I get asked a lot. Do I need to actually notify if I am exempt? So yeah, thank you very much. And time for one more question, I think. So, what supporting documents are required for the ESR reporting?
So still we are waiting on more clarity and guidelines on this part, but for sure the financial statement is one of the document that would be required, because the regulation also clearly talks about this, and also the report talks about the audited financial. So still we are waiting for whether it will be financial statement or audited financials, but definitely in addition to this financial statement, there could be other documents which the authorities will ask during the reporting, or maybe the FTA could ask at the time of the assessment. So the company needs to be very clear. They need to be very much prepared when they are filing any report this time. If the authority is not asking any documents also, they should be having the documents, because at any time they can come back and they can ask, because there's a 6 years time being given by the authority. During this 6 years period, they can anytime come and check for the documents. So mainly the documents will substantiate that whether the companies have fulfilled the parameters of the economic substance test or not, which is the main aim of bringing this regulation in place. So the main aim is that the companies are complying with the regulation as well as satisfying the testing parameters given under the regulation. So if the companies cannot, substantiate that with the documents, they may face some penalties which are being given in the regulation. So I would advise all the companies to be ready with the documentation part very detailed.
Yeah, brilliant, Sakina. Thank you so much. I think we're coming up on time for questions now, but thank you everyone for your support. Thank you everyone for writing in and sharing your questions, and thank you, Sakina, for some of the responses. Now, if your question hasn't been responded to yet, do not worry. Do not feel left out. We will get back to everyone that has posted questions up to date. Myself and the team will come back and we'll answer everything to make sure that everyone is fully up to speed. Just want to say thank you to everyone for their attendance today. Look forward to you all coming to join us for our next webinar, which is on the ICV, the in-country value certification. We are sharing a link now in chat for everyone, so please do follow the link, get it in your diary. ICV has been a big part of this year for a lot of businesses, and Tahir is perfectly positioned as one of our experts when it comes to audit and ICV to be able to provide valuable insight and feedback on where businesses are. If anyone has any other questions, feel free to reach out in chat for now. But yeah, just want to say thank you to everyone for their attendance today, and look forward to speaking with you all again very soon. Thank you.